Morning again, guys. All right, it's 8:30 and PPI, Producer Price Index numbers just came out, and also what came out was retail sales numbers. Retail sales numbers were down. To give you this, retail sales last month were up 2.3%. This month they are down 0.1%. People aren't spending money, okay? So, you know, this is kind of you know, oh, gee, it'll get inflation down if people don't spend money. Now, the reason people aren't spending money is people don't have any money. There's the problem. All right. I want to give you this. Does anybody realize that we are now in more debt? And I'm not talking about the amount, I mean, the $31.6 trillion in debt. We are now, as a country, running 131% debt to what our gross domestic product is. So basically, what that means, our GDP in the United States right now is somewhere around $26.2 trillion. That's combining all the goods and all the services that are sold in the country in a year. Everything. We have $26.2 trillion. We're $31.6 trillion in debt. Okay. So literally, if we took everything that is produced, all the work you do, the doctors, the lawyers, the waitresses, whatever it is, and gave all that money, every single penny that was earned by anything, by your work, by what you sell, whatever it would be, we would still be short $5 trillion from paying off what the United States owes. Try running your household like that. We are now at the highest percentage ever, okay, including World War II, of our debt to GDP. Just saying, okay? This is how bad this has gotten, all right? I mean, if you go back and look where we were under the Trump administration, we capped out at 107%. Biden's got us up to 131%. Just saying. Not that 107% is anything good. 131% is worse. We are not at, as one bank called it this morning, a tipping point. We aren't at a tipping point. We're at the point of no return. Okay? This is it. This is where you're going to see a worldwide financial collapse. And it is up to us to know how to handle this. All right? Now, you take a look at, some of you guys know this term. I talked about it yesterday. Dead cat bounce. All right. The markets tanked on Monday, right? And you had people going, "Oh, I bought, First Republic Bank, or I bought, this, whatever it would be, and I'm making such and such money." And I'm like, and I said to you guys yesterday, do not expect this to last. This was not a one-day thing. Gee, what happened this morning? Credit Suisse is down 20% again this morning. It's down at $1 and something. Okay, Credit Suisse will fall probably by the end of the week. The European bank index, okay, dropped 6% yesterday. It's down another 1.6% today. You now have all the talk ramping up about, is the Fed going to pivot? Okay, meaning we've been going through rate hikes, and the Fed's going to go, oh crap, we did too much, we're going to pivot, we're going to start doing rate cuts. The market itself is now pricing in almost a full percentage point of rate cuts. At the same time, we're talking about next week the Fed potentially raising rates 0.25%. The investment banks can't figure out what's going on. The market can't figure out what's going on, all for a real simple reason. Janet Yellen and Jerome Powell don't know what to do. And this is what I've been saying over and over and over again. Overnight, the markets were down about 100 points until around 5 o'clock. I've been watching since this morning, okay? Right now, the markets are down, the futures on the Dow are down 571 points. Okay, they fell off the table at 5 o'clock in the morning. which is about when people start waking up, Wall Street folks start waking up and start taking a look at things. You also had, the Asian markets coming to a close, the European markets getting into full swing of the day, everything. That's what you got going on, all right? The market is, and now we're down 609 in that fast I'm watching this live, okay? Gold and silver, okay, this morning at around 4 o'clock, we're down. Gold was down about $10 a share, or $10 an ounce, I'm sorry. Silver was down about 20 cents an ounce. At 5 o'clock, that all turned around. Silver right now is up 35 cents an ounce, up 1.6%, and this is 836, okay? Gold is up $17.55. We've had almost a $30 swing in the price of gold in 3.5 hours. The banks around the world are starting to now fall apart. That's what's going on. You can talk about all this with, oh gee, the banks recovered and everything like that. No, we're coming closer to the end of the week here, guys. And you're going to see some of these banks fall apart. If you take a look at pre-market trading for some of these banks, okay? First Republic Bank, the one everybody, was lined up at, down about 3% in the pre-market, all right? If you take a look at the other one that I was telling you about, whoops, I got to help if I put the ticker symbol in right. Oh, don't give me that, come on. I forgot what the ticker symbol is all of a sudden. But you take a look at Credit Suisse, like I said, down 20%. If we take a look at even some of the big banks, okay, looking at, say, Citigroup right now. Citigroup is down almost 5% this morning. JP Morgan, okay. Where's JP Morgan right now? JP Morgan is down 3%. You saw the stories yesterday about a flight to safety, or so they think. Flight too big to fail. People were taking money out of the regional banks and putting them into the big banks. And all the big banks were going, oh my God, we're seeing all this inflow of capital and everything like that. That's not a good thing, because when we see a big bank go under, then all bets are off. Guys, you can plan on inflation is not going away. I'm telling you right now, the 6% might be the new norm, at least for the rest of the Biden presidency, okay? Remember, Biden put out this budget the other day of what? Astronomical amounts of money that he wants to borrow to go spend on bullshit. This is, we've already got the highest amount of debt ever under this president, the highest debt ratio under this president, and his idea to solve that is let's borrow more money. It's very, very, very important watching what's going on, watching your bank, watching the macros and the micros in the economic world right now as to what to do. But it's imperative that you are protecting yourself. A few of you guys have asked me, and I understand this, that, okay, I've got my 6 months of cash at home. Good. I've got my 20% gold and silver at home. Good. Okay. Now I've got $10,000, $20,000, $50,000 extra. What do I do with that? Where do I put it? And it's a excellent question. There is no safe place. What I would suggest, okay, and I'm not giving financial advice to anybody. I want to make that clear, but this is my plan, okay? Anything you have extra, once you have all your food, 2 years worth of food taken care of, all your ammunition, my suggestion on ammunition is 10,000 rounds per platform that you have. If you have 9mm and 223 and 20 and 22 long rifle, you need to have at least 10,000 rounds of each. Okay, that's mine. Once you've got your power taken care of, your generators, however you're going to do it, if it's gas, if it's propane, if it's solar, whatever it would be. once you've got your water taken care of, all of that sort of stuff, once you have everything taken care of, that now you're going, okay, I'm working on a third year of food. I mean, silly. Once you've got all the canning jars you could possibly think that you need, once you've got all the seeds, et cetera, et cetera. Once you get to that point and you go, okay, I'm there. And a few of you guys have emailed me and said, I am there. What do I do now? I know you're going to go, you're nuts, but this is what I'm going to say. You got to put it somewhere. Sitting in cash is doing nothing for you. You're locking in a 6% loss because you get that $1 bill, and a year from now, that, like I said, that loaf of bread now costs $1.06, and you've got that $1 bill. Okay, not going to do you any good. Look at short term, nothing more than 6 months. Okay, Treasury bills and CDs. That's it. Okay, you got to try to put it somewhere. What you're hoping is that the insurance FDIC covers the bank, and you hope that the government still continues to work. If the government stops paying interest on T-bills, guys, your money means nothing anyway. Right? I'm just saying. But at least that way, you're picking off 5% interest. You're only losing at that point the 1%. That's the only option you have at this point, because all of it in cash is not prudent financially, and it's not safe. I mean, again, remember, you got that 6 months of cash in your house and your house burns down, that cash is not covered by your home insurance. You got to put it somewhere. And I know it sucks. There is nothing that is 100% certain. There are no guarantees in life other than death and taxes. Yes, you are taking some risk, albeit very small, by putting it in T-bills or putting it in CDs. That's it. But playing this stock market right now is a fool's game. Okay, putting it in crypto is idiotic. All right, where to put it? If you want to buy land, use the money to buy land. If you have any debt, home, car, credit cards, school loans, whatever it is, use the money to pay that off. Get yourself to a clean slate. Because if we get to hyperinflation, guys, which is very possible because the Fed doesn't know what's going on and the world banking system is starting to crack, if we wind up in a world hyperinflationary environment, you want to make sure you've got everything taken care of, and you want to make sure your slate is as clean as possible. Because I will tell you this, the first thing the governments are going to do and the banks are going to do is they're going to try to shore up they're going to try to protect their butt. Okay, I'm sorry, Mrs. Jones, we're repossessing your car, we're foreclosing on your house, etc., etc. There are those little clauses in your mortgage that says, at any given time, based on such and such, that the full note can become due, payable immediately. Okay, just be aware of that. We are in very trying times financially. It's doing whatever you can to protect yourself. And I mean, again, I will say, silver is still a good buy down here, even though silver is now, 22 and change, thereabouts. I dropped off my screen. No, it's because I pulled up others. Quotes. Silver is still something good to have, for the simple reason, guys, it's not only an investment, it's also an industrial metal. All right. So is gold. Those are used in computers. Silver, somebody said to me yesterday, do you realize that was it 500 ounces of silver in a Tomahawk missile, or 300 ounces or something like that? Yeah, it's still going to be used. Having that in your back pocket is definitely worthwhile. Go read the books I talk about. Go read Patriots. Go read 1 Second After, and you'll see what the benefits are in those fictional settings, but they're real important in the real world settings. Guys, protect your money. We had a dead cat bounce yesterday. The market looked good. Everybody was, euphoric. Hey, look, there was just a blip on the radar. I told you it was not, okay? And when you got Dow futures right now ticking around down 615 points, that will tell you something. When the market's down 2% going into the open, that's going to tell you it's going to be ugly today. Doesn't mean the market can't turn around and be back up 500. You're going to have a lot of speculators going in today going, hey, I can buy stuff on the cheap. That's gambling. That is not prudent. Okay. Sure, you might make some money. I got no qualms about that. You want to play the market. Okay. If you think it's a game, if you think it's a casino, go do that. If you want to protect yourself, do the prudent things, do the smart things, and get your money into safety. That would be the advice that any responsible financial advisor would give you right now. Would be find yourself a safe haven. Please do that yourself. Pinball out.